What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, and in today's video we're going to be talking about some of my top penny stocks that I'm looking to buy right now. I got the money tie on, just ordered it the other day, got it custom made from Ferragamo or Gucci, one of those big high-end clothing line places, and I got it shipped in today, so I thought I'd throw it on and we'd break down some A-plus penny stock setups. The penny stock market has been really good. It's been really hot. And in the private Discord chat, we've caught some really nice trades on some penny stocks in the last couple of weeks. But a lot of retail traders and investors have taken their eye off the ball. They've been solely focused on the big short squeeze stocks. And who can blame them? But it's time to get back to the basics. And it's time to pay these A-plus penny stock setups some attention. So that's what we're going to be breaking down in today's video. We're going to be looking at my top penny stocks right now. We're going to look at them from a business model fundamental perspective, and we're going to look at them from a technical analysis perspective, and I'll offer my personal opinion on where I'm looking to buy and my price targets. If you're new to the channel here at Touchdown Trades, we talk about the hottest stocks in the market every single day. So consider going down there and hitting that subscribe button. And everybody do me a big favor and like the button. Just start clicking all the buttons for the YouTube algorithm. And if you want to get some free dough, some of that free Skrilla, from some of that free cheddar, that lettuce, that guap, the dinero, then go down there and click the link in the description for Webull. They're offering in the Touchdown Trades community 2 free stocks valued up to $1,850. Free money. Check it out. All right, guys, let's break down my top penny stocks right now. Let's get it. Before we get started, real quick, guys, I got to plug the private Discord chat where you get my buy and sell orders in real time. If you want to come trade with us, there is a free trial link in the description. We've been crushing it. ANTF, I sent out an alert on this penny stock. 2 days later, it's up 40%, and we're cashing out in the private Discord chat. I went and spent some of my profit on this Superfly money tie, $9.99 on Amazon. It's got $100 bills on it. What more can you ask for? Enough of the nonsense. Let's break down these penny stocks. The first penny stock we're going to be breaking down today isn't really a penny stock anymore. It was this morning, but then it ran up a couple 100% intraday. This is CPSH, ticker CPSH, CPS Technologies Corporation, and it closed yesterday at $6.50 a share and ran up to over $20 per share today. It was an absolutely massive, insane move. So let's talk about the stock. What news came out to send it running to the moon? And is it a good buy at this level even after the run-up? CPS Technologies, they say on their website that they've been around for over 30 years. CPS has built a reputation as a world leader in combining metals and ceramics to improve performance and reliability of applications in a variety of end markets. So basically all they are is a materials company. Why is this important? Why did it run up 200% plus today? Because this defense electronics, they manufacture armor for the military, and they got a big deal. Let's read on the website what they talk about for their military armor applications. Armor is applied to vehicles to provide protection from ballistic threats. The traditional armor solution is steel. Just add more steel as the threat increases. However, some threats easily defeat steel armor. Boom, boom goes the missile, and down goes the steel. But CPS apparently is different. Some threats easily defeat steel armor, and the weight of steel armor needed to defeat now common threats significantly degrades the performance of the vehicle. Ceramic armor is the solution. So CPS says they have the solution, but it brings its own set of problems. How do you attach ceramic armor to the vehicle? How can you maintain protection if a ceramic tile is destroyed? CPS Hybrid Tech Armor solves these problems. So what they're saying is they have a better material than steel to protect military vehicles and even vessels from ballistic blasts. That's where today's news comes in, and it was a doozy. CPS Technologies Corporation receives purchase order for hybrid tech armor panels for an aircraft carrier. That is like company changing news. And a lot of these penny stock PRs that send penny stocks skying higher aren't really that big. And the stock ends up coming back down. But a PR like this, they got a deal for an aircraft carrier with the United States military. That is huge news. Let's read a little bit of the PR. So it says CPS Technologies Corporation today announced receipt for a purchase order for hybrid tech armor panels to be installed as the strike face of advanced ballistic shields to support U.S. Navy ships. The shield provides ballistic protection for crew-served weapon stations and the sailors manning them. The purchase order covers panels to equip all crew-served weapon stations on the aircraft carrier. If you guys have ever seen Pearl Harbor, the movie, Cuba Gooding Jr. standing on the aircraft carrier or the tack boat, and he's manning a turret, right? He's got a turret. There's like a machine gun on it, and the fire planes are coming in. Cuba Gooding Jr. standing right here behind the turret. He's got like a shield, and he's shooting at him. That is what I'm envisioning here. I'm envisioning they put panels right there to protect the guy on the machine gun shooting at the planes flying in at Pearl Harbor. That's what I'm kind of envisioning. Obviously, it's going to be more high-tech than that. But basically, it's a metal shield that's going to protect stationary dudes who are on these naval vessels. And this is a huge PR. I don't think this is one of those small penny stock PRs where the stock ends up coming back down. If we look at the fundamentals here for a second, we have a market cap of $235 million. I think that was pre-trading today, 235, so that's probably a little bit bigger of a market cap. And it's an already profitable company, and they had 1.5 million of net income last year on sales of 22 million. The sales are going to double off this purchase order alone, and I expect that income, if the margin stays the same, then we're talking about double the income. And if the Navy likes what they get from this product, obviously they're going to buy more. It's going to help add a name to the company. Whenever you strike a big deal with the government or the military, it helps your reputation and helps you to expand your client base. This is a huge deal for this company. But there's one problem, and that is the fact that the stock ran up, 250% today, and I have a rule that I don't chase. So I'm going to need to see a pullback. There's no doubt about it. I cannot chase this stock after it ran up like this. I will be watching it like a hawk. I would love to buy this penny stock. Well, it's not really a penny stock anymore, but I would love to buy this stock on a pullback. And I just don't know if we get it or not. I'm not saying we get a huge pullback like that. I would probably need to see it down here towards 1250 or so in order for me to buy. That's just my personal strategy, that not to chase. I think chasing over time gets you in trouble more than it doesn't. Sometimes it works out. Most of the time it doesn't. So I would need to see a pullback down towards $12.50, $13 a share. But I think this news is really big. The second penny stock we're going to be breaking down, this ticker symbol SENS, SENS Holdings. And I typically don't talk about biotech stocks. I typically won't trade biotech stocks. I've broken the rule a couple times recently and it's worked out for me. And I like the setup here on this SENS stock. We have the breakout over the consolidation, and now we're currently bull flagging. You had the flag pull, you have the flag, and when you get a break with volume out of that consolidation, it typically results in explosive move higher. We can see that the volume has decreased during this consolidation phase. We're going to need volume to come into this stock and send it out of this consolidation wedge, bull flag, whatever you want to call it. Let's break down the fundamentals for this SENS stock real quick. About 422 million people in the world have diabetes. That is an astronomically high amount of people. That's about 1 in 11 people have diabetes. The market for diabetes treatment and medications and monitoring systems is absolutely giant. It's a huge market. If you can capture a tiny percentage of that market share, you can become a huge company. That's where SENS comes into play. The SENS is a diabetes monitoring system that this company, SENS, is working on. The world's only long-term CGM system. With the SENS 90-day CGM system, you can actively manage your diabetes simply and with confidence. SENS provides continuous blood glucose monitoring for up to 90 days via an under-the-skin sensor, a removable and rechargeable smart transmitter, and a convenient app for real-time diabetes monitoring and management. So basically, you put the sensor under your skin, it monitors your blood glucose levels, it then relays that data to a transmitter, which then sends it to your mobile app where you can monitor whether your blood glucose levels are too high, too low. Do you need some insulin? Are you good to go? Do you need to eat a snack? Whatever. So this would really help narrow the hassle down for diabetics who are sick of pricking their fingers, drawing blood, and checking their levels. So I have seen technology like this before, and I really don't like buying biotech stocks, especially pre-FDA approval, but I do see the potential for a technology like this. It's going to happen where something like this gets FDA approved. If that happened to a stock like SENS, it would send it through the roof, to the moon. This is one of those stocks where if you want to invest in it, you need to realize that if it comes out that their device is not going to get FDA approval, then it's going to crash. You need to have that outlook where this is either going to 10x or it's going to go back to 20 cents, 40 cents where it came from. And there's nothing wrong with that. There's nothing wrong with having a couple of those kind of stocks in your portfolio, the home run or strikeout kind of stocks. I have a few of those in my portfolio as well. Right now, I'm not wanting to buy this as a long-term investment, but I absolutely love the chart setup, and I am taking interest in this for a swing trade. If volume comes back into this, and we break out of this consolidation that we've been seeing, we're heading higher. We're breaking out over 4 and heading towards 450. And that's a huge move in this small cap stock. I would set my stop loss down here under $2.20 a share, and I'd look for that breakout. We need increased volume. Once this volume breaks out of this descending like wedge that we've seen, we get one of these big volume days, this thing could easily break out towards $4 a share. The third and final stock we're going to be talking about is BNGO, Bio-Nano Genomics. This is a genomics mapping company. I'm sure you guys have been hearing about it all over social media. It's been talked about a lot. Are using the Sapphire optical genome mapping tool to help identify at-risk people for various diseases. It's also being used to identify people who are very susceptible to the Rhinoceros Rex. So if you have certain genomes, you're more susceptible to have diabetes, cancer, you're more susceptible to be at risk for Rhinoceros. So this is some very high-tech stuff. There's also been rumors that ARK has been interested in the company. They've been talking about it. It was added to one of the best ideas for 2021. Stuff like that. But I don't think ARK is going to be willing to chase. We've just been chugging along, chugging higher. And if ARK buys now, they're getting front ran by a bunch of retail investors and traders, and you can't make money doing that. So I'm waiting. I'm waiting for a pullback. I'd love to buy back here for a long-term investment down towards $7 a share. We have tons of support here at this area. Prior resistance becomes new support. We can see that we tested it, failed to $7, finally broke over it right here, and then we held support right there. So I think this is going to be a key support area. I'm not saying we get down there, but I'm stalking this. I got alerts set to where if we get a pullback down towards $7, $8 a share, I'm going to be looking for an entry and hoping this thing rounds back out. But this is another one of those biotech stocks that either is a home run or it fizzles out. We're already at a market cap of $2 billion. We have no sales to speak of. So this is one of those long-term buy and hold growth outlook stocks. I do think it has a lot of potential. The technology is amazing. There's no doubt about it. All right, guys, that's going to wrap up the video. I hope you got something from it. If you did, do me a big solid and hit that like button. If you're not yet a subscriber, consider subscribing. Catch you guys in the next one. Until next time, peace.
Drop.